Where is the puck going? Yeah, just to reiterate that point, as investors, that's what we want to be thinking about. It's like, what's happening right now that helps us predict where the future might be? And so ultimately, it's like, okay, hang on. So maybe we're measuring things wrong. Now, anyone that spent any time looking at Bitcoin knows that Bitcoin as money is measuring value. Value ultimately is completely subjective based on human action and what the individual requires in any one moment. But it's one of the reasons why I therefore love this concept of like a three-tiered approach to capital. So you've got the humanistic capital, you've got the intellectual capital, and with those two, you drive financial returns. And so, let's buy Uber, let's buy Lyft. They're really great businesses to own. They're not profitable. So because of the kind of warped way of money printing, the business looks like it's valuable, but is it? Well, maybe not. So the symptoms of broken money, they're everywhere, right? And so when a software development process can be done at a fraction of the cost, a fraction of the time, and totally bespoke, where does the value come from? And that's why I think the physical side of things is such an interesting place to now look. And hence, maybe hardware is the way to go. Another example I want to bring up is beef. Like grass-fed, regeneratively grazed beef is, in my opinion, the best form of food we could possibly have. And a brief shout out to Brisket, who he and I have talked about this in the past. It's like, okay, so you want to build a beef business. Well, you need a farm. Okay, so you've got to own the land. Okay, well, the opportunity cost of not owning Bitcoin versus owning land is massive. You go and pay for a piece of land today. In 5 years' time, you could buy 5 pieces of land. But you need food. And so in an environment where we're moving into an inflationary period, like there's no doubt in my mind that that's going to happen, right? The bankrupt, the level of debt to GDP of all the major countries around the world, driven by the Fed, is so high that they can't do anything but print more money. And so what that means is the price of hard assets is going to go up. And so maybe, just maybe, the comparison of the Bitcoin returns versus land, you're making the wrong measurement. Like I touched on before, maybe we're measuring the wrong thing. So, okay, at some point, you have to not think purely financially. You've got to think about that humanistic investment. It's like you've got to live somewhere. Much like my last episode when I was talking about you can't live in a Bitcoin, where you need shelter, you need food, you need to clean your clothes, but maybe you'll do it yourself instead of going to a laundrette. And so, okay, so what does this look like? Well, maybe you have to own the land. Maybe you have to rear the beef. Maybe you have to then process that beef yourself. And if you can own all of that, then the value that you're actually creating is far higher than what some of the metrics we previously would have used to create are, especially if you can go into these physical supply chains and start implementing the AI that we've discussed so far. And again, like the average age of ranchers and farmers is well over 50. They're boomers. They're not going to do this stuff. Now, would it be difficult? Yes. But are you able to deliver value to the marketplace that is incorruptible from the likes of inflation? With something like beef, I believe so. And it's a set of competencies, right? Who else can create the beef? Well, there's only a handful of people that have the land to do it on, have the skill set to actually do it, have the herd in the first place to replicate. And so, yeah, conceptually as investors, maybe we're overlooking something here, or maybe I personally am overlooking something here.